Hey everyone, and welcome back to Investing Talk Podcast. We've got some really exciting news to cover today, all about Roku, ticker symbol ROKU. This streaming giant just dropped their Q4 2024 earnings. And well, let's just say things are looking seriously interesting for investors.
Yeah, what's really catching my eye is how the stock reacted right out of the gate. Roku jumped almost 15% in pre-market trading Friday, February 14th. And get this, it's up over 30% since the year began. That kind of surge tells me there's a lot of positive sentiment around this company.
And with good reason, their numbers are pretty impressive. Revenue for the quarter soared 22% year over year, hitting a whopping $1.2 billion. They absolutely crushed analyst expectations.
It's not just the total revenue, though, that's got people talking. Their platform revenue, the money coming from advertising and subscriptions, that hit a major milestone. It crossed the $1 billion mark for the very first time. That's a huge sign of strength for their business model, especially in a market as competitive as streaming.
Absolutely. So they're clearly bringing in the cash, but are people still signing up for Roku? Are they growing their user base?
They are, and that's really the key in this industry. Roku added 4.3 million active streaming households just in Q4 of 2024, bringing their total to almost 90 million households. That means they're reaching almost half of all broadband households in the US.
Wow, that's some serious reach. So we've got strong revenue and user growth, but here's where it gets really interesting for investors. Roku's projecting they'll be profitable by 2026. Now that's a potential game changer.
Reaching profitability is a big deal for any company, but especially in a fast-growing market like streaming, it shows they're confident they can manage costs and scale their operations efficiently. This projection could make Roku a much more attractive option for long-term investors, the ones looking for stability in returns.
Makes sense. And it looks like Wall Street is taking notice too. JP Morgan, for example, they raised their price target on Roku stock to $115. That's a pretty bullish signal.
Analyst upgrades are definitely a positive sign, but it's always crucial for investors to do their own research. Don't just rely on analyst opinions. You have to consider your own investment goals and your own risk tolerance.
Couldn't agree more. Okay, let's shift gears a bit and look at the technical side of things. Roku closed at $99.07 on February 14th, a 14% jump for the day, and it's currently trading above both its 50-day and 200-day moving averages. Those are classic bullish signals, wouldn't you say?
They are generally seen as bullish. That upward price momentum combined with being above those key moving averages does paint a positive picture. However, we need to look a bit deeper. Some indicators suggest a bit of caution might be warranted.
No. I'm all ears. What are we seeing?
Well, the Relative Strength Index, or RSI, is right in neutral territory. Plus, the MACD, the Moving Average Convergence Divergence Indicator, is actually flashing a sell signal right now. These could be early hints of a pullback, a period of consolidation before the stock makes another move upward. It's something to keep in mind, especially for short-term traders.
Interesting. So a mixed bag of signals there. It seems like we need to dig a little deeper into the streaming landscape as a whole. It's evolving at a rapid pace with lots of moving parts. What are some of the big trends you're watching that could impact Roku? And in turn, how could these trends impact investors?
One trend that's really fascinating is the rise of what we call co-exclusive licensing deals. This means studios are starting to share their movies with several stream services at the same time. They're moving away from those super expensive exclusive content deals. This could be a major advantage for Roku.
I see where you're going with this. How would this benefit Roku, and why should investors care?
Well, first, it allowed them to be flexible and adapt to viewers' changing tastes. They can partner with all sorts of content providers, from major studios to smaller, more niche channels. This gives users a huge selection to choose from, which keeps them engaged and coming back for more. Second, and this is really key for investors, it helps them avoid those huge costs associated with producing original content. That's a major factor in their path to profitability, which, as we talked about earlier, is a big deal for long-term investors.
That makes a lot of sense. So they're kind of sidestepping the content arms race and focusing on providing a more diverse selection for users.
Exactly. Another trend we're seeing is the breakdown of those rigid release windows for movies. Remember how it used to be a movie would go to theaters, then to DVD, and finally, much later, land on a streaming platform?
I do remember those days. It feels like ancient history now.
Right, now those lines are blurring, and that fluidity gives Roku even more options for building their content library, which is good news for users and potentially good news for investors. However, there are challenges too. Traditional broadcasters like the big TV networks are becoming much more active in acquiring content themselves. That's competitive pressure that Roku will have to handle strategically.
Okay, so we've got a successful business model, strong growth, some technical flags to watch, and a streaming landscape that's constantly shifting. It's a lot to take in. So what does all of this mean for you, our listeners? How should you think about Roku as a potential investment?
That's the million-dollar question, isn't it? Roku definitely has the potential to be a very interesting investment opportunity. Their financial performance is impressive, their user base is growing, and they're projecting profitability. But, and this is a big but, the streaming market is incredibly competitive. Plus, those technical signals we talked about suggest a bit of caution might be wise.
So it's not a slam dunk either way. What are the key takeaways for investors? The folks who are trying to decide if Roku is right for their portfolio?
Thorough research and a clear understanding of your own investment goals are absolutely crucial. Think about your risk tolerance and your time horizon. How much risk are you comfortable with? How long are you willing to hold this investment? It's also essential to stay informed about how Roku navigates this evolving streaming landscape and whether they can actually hit those profitability targets. Don't just jump on the hype train. Think critically and make informed decisions.
Well, excellent advice. All right, listeners, that wraps up part one of our look at Roku. Be sure to tune in next week for part two, where we'll explore the competitive landscape and delve deeper into the risks and opportunities facing this streaming giant. Welcome back to Investing Talk Podcast. Last week, we kicked off our analysis of Roku, ticker symbol ROKU. We took a look at their strong Q4 earnings and that impressive stock surge, but as any savvy investor knows, you can't make informed decisions without understanding the competitive landscape. So this week, we're diving into the battle royale of the streaming world.
It's a crowded arena, that's for sure. You've got the established giants like Netflix, Amazon Prime Video, and Disney Plus. They all have massive content libraries and a global reach that's tough to match.
Right, and let's not forget about Apple TV Plus, HBO Max, and all the other contenders jumping into the ring. It's a tough neighborhood. So how does Roku stand out in this cutthroat environment? What are they doing to attract viewers and ultimately investors?
That's where their platform-centric approach comes in. Remember, Roku isn't just a hardware company making streaming sticks and TVs. They've built this whole platform that brings together content from a variety of sources. It's kind of like a one-stop shop for all your streaming needs.
So instead of trying to outspend the competition on big-budget productions, they're focusing on creating a user-friendly platform that offers a little bit of everything. Is that what you're saying?
Exactly. You could think of them as like the Switzerland of streaming. They don't necessarily take sides in the content wars. They provide a neutral ground where viewers can access it all. And this strategy has some real advantages, especially when it comes to managing costs.
Okay, I'm intrigued. Tell me more about these advantages and how they might benefit Roku investors.
Well, first off, it allows them to be super flexible and adapt to viewers' changing tastes. They can partner with a wide range of content providers from those major studios to smaller niche channels. This gives users a huge selection to choose from, which keeps them engaged and coming back for more. And second, and this is key for investors, it allows them to avoid the huge costs associated with producing original content. That's a major factor in their path to profitability, which, as we talked about last week, is a big deal for long-term investors.
That makes a lot of sense. It's a smart strategy, but even with a smart strategy, Roku isn't invincible, right? What are some of the headwinds they might face as this market gets even more competitive?
One major challenge is the financial power of some of their rivals. We're talking about companies like Amazon and Apple that have really deep pockets and can practically give away their streaming services as part of a larger ecosystem. Think about it, they can bundle streaming with things like free shipping or music subscriptions. It's really tough for Roku to compete with that kind of value proposition.
Especially since Roku relies so heavily on platform revenue. If people are getting their streaming fix bundled with other services that could really cut into their market share.
Absolutely. Another challenge is the constant pressure to innovate. The streaming world is changing all the time. New technologies and features pop up constantly. Roku needs to stay ahead of the curve. They need to keep improving their platform, offering features that users love, and securing partnerships to stay at the top of the game.
So it's a balancing act. They need to maintain this platform-agnostic approach while also finding ways to stand out from the crowd.
Exactly. And we can't forget about the regulatory landscape. Governments around the world are taking a closer look at the power of these big tech companies. Roku could face regulations regarding things like data privacy, content moderation, or even antitrust concerns. Navigating those legal and political complexities is going to be crucial for their long-term success.
It sounds like Roku's future hinges on their ability to not just adapt to change, but to anticipate it and get ahead of it. It's a high-stakes game. But, hey, if their Q4 performance is any indication, they seem to be up for the challenge. So we've talked about the competition and the challenges, but what about the potential rewards? What kind of upside are we looking at if Roku continues to execute its strategy effectively? What can investors expect?
Well, the global video streaming market is massive, and it's only getting bigger. Some estimates say it could reach over $1.8 trillion by 2029. And Roku, with its growing user base and strategic partnerships, is in a great position to capture a sizable chunk of that growth.
Wow, Those are some numbers that would make any investor sit up and take notice. But let's break it down a bit further. What are some of the specific things that could drive Roku's continued success and lead to those big returns?
One key factor is their international expansion. They've got a strong presence in the US, but there's a huge untapped market for streaming services globally. Roku is actively pursuing partnerships with TV manufacturers and content providers in key regions like Europe, Latin America, and Asia. If they can replicate their US success in these new markets, their growth potential just explodes.
That makes sense. Expanding into new markets is a classic growth strategy. What else is on their roadmap?
Another area where Roku is making strategic moves is advertising. Remember, their platform revenue, which is largely driven by advertising, is a crucial part of their success story. They're constantly innovating their ad tech capabilities. They want to offer advertisers more targeted and effective ways to reach their audience, which ultimately means more revenue for Roku.
So we're talking about things like personalized ads based on someone's viewing habits and demographics.
Right, and they're also exploring new ad formats like interactive ads that engage viewers more directly. This focus on advertising technology could give them a real edge in that competitive ad market. The more effective their advertising platform becomes, the more attractive it is to advertisers, which of course leads to revenue growth and potentially happy investors.
It seems like Roku is playing a smart game, finding that balance between user growth and a sophisticated advertising strategy. But as we've discussed, the streaming world is dynamic and unpredictable. So let's shift gears for a moment and talk about some of the wildcard factors that could impact Roku's trajectory, either for better or worse.
One factor to watch closely is the evolution of streaming bundles. We've seen more and more of these bundles pop up in recent years where you get multiple streaming services packaged together at a discounted price, a trend that's likely to continue, and it could have a big impact on Roku, both positive and negative.
Okay, I'm listening. Explain how this could play out.
Well, on the one hand, if Roku can effectively integrate these bundles into their platform, it makes them an even more attractive destination for viewers who are looking for value and convenience. But on the other hand, if those bundles are primarily controlled by their competitors, it could limit Roku's ability to generate platform revenue.
It's a tough spot to be in. So the key for Roku is to make sure they're not left out of the bundling game, either through partnerships or their own strategic bundles.
Exactly. Another wild card is the potential for industry consolidation. We've already seen some mergers and acquisitions in the streaming space. As competition heats up, that trend could pick up speed. If some of the smaller players get swallowed up by the bigger fish, it could reshape the entire landscape.
And how would that impact Roku and its investors?
It's hard to predict with certainty. It could create opportunities for Roku to partner with newly merged companies or maybe even acquire strategic assets themselves, but it could also lead to a more concentrated market with even more powerful competitors. It's a situation that requires careful monitoring and adaptability on Roku's part.
It seems like the streaming world is all about rolling with the punches and making strategic moves. So let's shift our focus back to the individual investor listening right now. What are the key takeaways they should consider as they evaluate Roku as a potential investment opportunity?
The most important takeaway is that Roku operates in an industry that's incredibly fast-paced, competitive, and constantly evolving. There's inherent risk, but also significant potential for reward.
That seems to be the theme with a lot of tech investments these days, high risk, high reward. But how can investors make sense of all the complexities? What should they be paying attention to as they do their research?
Here are a few things to consider. First, really dig into Roku's financials. Look closely at their revenue growth, their profitability metrics, and their ability to manage costs in this very competitive environment.
Solid advice. Those numbers tell a story. What else should investors be watching?
Second, stay informed about Roku's strategic initiatives, particularly their plans for international expansion, their progress in developing advertising technology, and their partnerships with content providers and device manufacturers. These are the things that will drive their future growth.
So it's not just about the numbers, it's about understanding the bigger picture, their overall vision, and how effectively they're executing it.
Precisely. And finally, don't underestimate the importance of industry trends. Pay attention to the competitive landscape, those streaming bundles we talked about, the regulatory environment, and the potential for more mergers and acquisitions. These factors can have a huge impact on Roku's long-term prospects.
It's a lot to keep track of, but as you said, knowledge is power. Well, folks, we've covered a lot of ground today, from Roku's competitive landscape and growth strategies to those wildcard factors that could shape their future. But there's one more crucial piece of the puzzle we need to explore before we wrap up this episode. Welcome back to Investing Talk Podcast. Over the last 2 episodes, we've been digging deep into Roku, ticker symbol ROKU. We talked about those impressive earnings, their competitive landscape, and all those growth strategies. But like any smart investor knows, no analysis would be complete without examining the potential downsides.
That's right. We spent a lot of time talking about the potential rewards, but we need to talk about the risks too. Investing always involves a degree of uncertainty.
Exactly. So let's get real for a moment. What are the big risks that investors need to consider before they jump on the Roku bandwagon?
One of the biggest risks, and we touched on this earlier, is the intense competition in streaming. We're not talking about small companies here. These are some of the biggest and most well-funded companies in the world.
It's a high-stakes game, for sure. With those big players pouring money into original content, how can Roku, with its platform-centric approach, realistically compete?
That's a great question. Roku's success hinges on their ability to differentiate themselves, to offer something unique that goes beyond just a massive library of content.
So just being the Switzerland of streaming isn't enough anymore.
Right. They need to innovate to find ways to keep users engaged and coming back for more. And another risk that investors should be aware of is the possibility that the streaming market as a whole slows down.
I see what you mean. People are talking about things like subscription fatigue and the rising cost of subscribing to multiple streaming services. It's a valid concern.
It is. Consumers only have so much disposable income, and as more and more streaming options become available, something has to give. If the overall growth of the market slows down, it could affect Roku's ability to attract new users and generate that advertising revenue that's so vital to their business model.
That's a great point. So while Roku's current growth is impressive, it's important to remember that the market might not grow at this pace forever. Are there other potential risks we haven't touched on?
Always a chance of technological disruption, right? Technology changes so rapidly, something new could come along and totally change how we consume entertainment. Roku has to stay adaptable and be able to shift with the tides.
Yeah, like those old flip phones that seem to disappear almost overnight, Roku needs to stay ahead of the curve. What about the financial side of things? Are there any specific risks investors should be aware of?
Well, Roku's still a relatively young company, and their profitability isn't guaranteed. They need to manage their spending carefully, especially as they invest in international expansion and developing their advertising technology.
Right, we talked earlier about how important it is for them to reach sustainable profitability. Investors should definitely be keeping an eye on that.
Absolutely. And finally, we can't forget about the regulatory landscape. Big tech companies are under increasing scrutiny from governments globally, and Roku is no exception.
Ah, yes, the regulators always something to consider. What sorts of regulatory challenges could Roku face?
They might run into issues with data privacy, content moderation, antitrust laws, even new taxes and fees, specifically targeting streaming services. Those regulatory issues can be expensive and time-consuming to deal with, and that could impact their bottom line.
So taking all of this into account, it seems like investing in Roku involves weighing the potential rewards against the risks. What's the most important message you want listeners to take away?
I'd say the key takeaway is that Roku is not a risk-free investment. There are potential challenges that could impact their success, but with careful research, a solid understanding of their business model, and a realistic assessment of the upsides and downsides, investors can make informed decisions that are right for their individual circumstances.
Excellent advice. Well, everyone, that wraps up our three-part deep dive into Roku. We analyzed their earnings, their competitive landscape, their growth strategies, and of course those potential risks to consider. We hope you found this helpful. And remember, do your own research. Think carefully about your investment goals and consult with a financial advisor if needed. The world of investing is dynamic, so stay tuned to Investing Talk podcast for more insights and analysis. Don't forget to subscribe, share this with your friends, and leave a comment with your thoughts on Roku. Happy investing.